There is no such thing as luck in this space. It's patience, discipline, and dedication. Now this is my first search entry from the BTC USD, and the price just sold very well. Now this is the second entry from Euro USD, and what we have here is called a bullish flag. Bullish flag, they usually break to the downside, and this is my first TP. So you measure the width of the flag to get your first TP. You have to love her very well. You have to take care of her. You have to spend time with her. When I mean I'm referring to the market. There's no one you would be very good if you don't spend time with the market. Nobody is all knowing, but you see, every time you spend in the market makes you a better trader. And there is no how, it's not possible you can be very good when you always procrastinate, you don't spend time with the chart. It's not going to work. Now, this is what we call a drop-based drop. Price would come to that region, that's the drop-based drop, to take sell order, after which it will push downwards. Now, this is a profit of about $32. So I'll claim my profits here. And you see, when it came, as I said, it sold. Now this is the third entry, and I'm taking the entry from the BTC USD. And what we have here is like a falling wedge, and just by the left we have a rally based rally. That's the shadow zone I marked at the downside. It's a strong buy zone. So whenever price comes to this region, it would sell. Sorry, it would buy, after which it might sell later on. And if you can look carefully, from the 1 minute time frame, even from the regions where I placed my buy, you can see a rally based rally. Some might call this break of structure, and the price buying going upwards. Now these two wide vertical lines, they are two key powerful zones. The top, the top is a strong resistance zone, and the one downward is the strong support zone. And the price cannot just start selling. So that's why the price bought for a while. It might sell later on, but it will buy for now. And I will hold this trade for a little while. I would hold it for a little while, then I'll claim my profits. Now this zone, this shadow zone, is what we call a rally based rally. That's a very powerful demand zone. Whenever price comes back to that region, it will react and buy for a little while. And I'll close now. Just as I told you guys, this is a 1 minute time frame. So when price came back again, the price bought, it reacted and bought. Now this is where I opened my buy, and that's where I closed it. Now on the VIX 10 year, we have what we call a bullish flag. Bullish flag, they go bearish, and at the top we have a strong sell zone. It is called a drop-based drop. Now, as it is, sometimes, well, price did not sell as I thought it would sell. This is why there is no entry that is 100%. Imagine if the account could not bear this Jordan, it would have got out, just blown up. Now, so no problem. I will look for another entry. And I found the one at VIX 25. And yeah, what do you think I'm going to do for just 1 minute? Just think. Okay, am I buying or am I selling? Okay, well, I will sell, yeah. And I will sell, yeah. If you look carefully, can you just for some minutes, can you just think, why am I selling? Why am I selling here? Just think, why am I selling? Why am I selling here? Why am I selling? Okay, now, the position I opened, they are not, and it's not too heavy for the account though. Well, now, this is the reason why I'm selling. First of all, if you look carefully, this zone is called a sell zone. It is a drop-based drop, and I will draw my trend lines first. Remember, when you are drawing your trend line, I would advise beginners, make sure it touches 3 weeks. 3 weeks. If it doesn't have 3 touches, It's not as if you cannot go with it, but it's advisable if it's 3. So after a while, I have to be sincere with you guys. The accounts, some of the positions they were cut off because of the position, the sell positions that I opened. It was much, so that was why the equity was down. And from the history, you could see that I opened my position from this red arrows. The blue ones are the positions that were cut off. So so we still have our equity is 98, the balance is 21. So the balance we are down because of that. Now, when the price broke out from this falling wedge, it's I think it should be called a falling wedge. And just imagine if I didn't close my trade from that former market. The account, everything, it would have blown up. And this would be the last entry. Yes, this should be the last entry. The Singapore dollar versus the Japanese yen. And this is also what we call it's like a rising channel. And just by the far left, we have a very strong sell zone. So price would not just buy, price would react as a sell. But I'll close my trade now. 102 from 12 to 102. That's nice. As I came back to check the charts, it pumped really hard. Why? Because of Trump's speech. I think the guy is more like he wants to ease tariff. So the market reacted bullishly to that comment. I want to talk about the Bollinger Bands Strategy. You might have heard Sagex, sometimes using it to trade. Sometimes I do use that strategy and it's okay. And but you have to understand that there's no strategy that is 100%. I think I saw a quote today by someone, and he was like, it's not just about how good you are, how good you can predict the market. It's more of the risk management you use. Now, from the Bollinger Bands Strategy, when the price breaks out from the upper trend line, if it touches the upper Bollinger Band, if it hits it, there might be a retest. And if you go to the lower time frame, like the 1 hour here, it's not really wise because it just touched the band not too long ago. And now this is the USD JPY, the 15 minutes time frame, and the price broke out. I was expecting the price to continue pumping upwards to touch that trend line, to touch this shadow zone at first before it starts selling. So I'll put on my my Bollinger Band to give the explanation here. So if you look carefully, when the price broke out, this green candle, when it broke out and touched the upper Bollinger Band, immediately it sold. So this is more of a scalping strategy. It will just sell for a while, and it is wiser if the band is far, and it's more effective if the band is far if the candle is far from the band. Now, if you go to the 5 minutes time, you can see that when it broke out, the band was just way too close to the candle that broke out, even in the 10 minutes time frame. So it's not so ideal if the band is very close. In the 15 minutes time frame, even in the 13 minutes time frame, so it look as if it didn't really work. But if you go to the 1 hour time frame here, when the candle that broke to the downside here, this very strong bearish candle, when it broke out and touched the band, it just started buying. Now, why? If you take a look carefully from this strategy, if it breaks out from the trend line and touches the lower Bollinger Bands, it's going to buy. And it's effective, as I told you guys before, if the band is quite far, or gold formula is quite far from the candle. And from this left, you have a draw based rally. That's a very powerful buy zone. And whenever the price comes to that zone, the price would buy. So we have two reasons: our entry, the demand zone, and the Bollinger Bands. And just practice it over time. Give yourself about like 3 months. 3 months. When you practice for 3 to 6 months, you become better at this strategy. Remember to like the video, subscribe, and turn on the notification bell, guys. If I would open a buy of about 0.05, and okay, I'm going to measure my top loss and my TP. So the stop loss is about $4 and $5 TP. So that's about it. So 1,
1. Well, not too bad, just okay, just okay. So guys, remember, like the video and subscribe so that we hit 1,000 subscribers.